Hey guys, what's up? Alec back with the daily stock market, and look at that. Coinbase up 12% again, now up 24% in the last week. We have Netflix up 4%, NEO up 4.4%, and many other stocks that were up and green today. However, we did see Tesla red on the day, and at one point they were even down around 4% on the day. And in the past week, they're still down 31%. Their recent pattern, short-term pattern, looks like the stock is starting to recover a little bit, making higher lows, but has yet to make new higher highs above 123 per share, which we really want to see for a bullish sign for Tesla. Now, in this video, I want to dive into two different stocks. The first one being Lucid, and the second one is Lululemon. So make sure you stay throughout this entire video. These are some interesting stocks with price alerts that just went off. Lucid Group is now down 82% in the year, and it is up 13% in the past week. So the question is, will it turn around? Is the stock headed back up, or is it going to fall again down to around $6.50? So make sure you hit that like button and subscribe on YouTube for the full-length videos so you're not missing out on any of those. And before we dive in the video, make sure you check out the program on the close friends list on how to become more advanced trader in the stock market. Go ahead and click on success number 7. Look at these most recent success stories just from this week. Up $2,000, 408% on Tesla. We have been raking it in on Tesla, getting in and out at the perfect time on option plays. The daily stock market on Instagram, now with over 188,000 followers. Thank you guys for all the love and support you've been showing on the page. And without any further ado, let's dive into Lucid Group. So as we scroll down, we know that they are an electric vehicle developer. They're out of California. They're a US-based company, electric vehicle stock, and the only other pure electric vehicle play other than Lucid is Tesla. So this is supposed to be a Tesla competitor. They only have a market cap of $12 billion, by the way, and they have an EPS, a negative EPS, of around 50 cents negative EPS, and they were trying to trend towards profitability. So a large portion of their success depends on making it to profitability or not. Okay, so here we see a summary on Lucid. Production ramp up remains a key watch item for EV startups as investors lose patience with over promises and under deliveries from the previously high flying sector, admin mounting macro challenges. And after slashing its production guidance twice, meaningful ramp-up progress delivered by Lucid in the third quarter has bolstered investors' hopes for a strong finish to 2022. Admittedly, Lucid's unprofitable nature remains a significant overhang on its shares' near-term price performance as rising borrowing costs and other macro uncertainties deter investors from risky long-duration assets. But not all hope is lost, with Lucid's valuation now brought back closer in line with its broader peer group. After an unforgiving correction last year, we believe there are two critical and attainable achievements within Lucid's reach that can help it rebuild credibility with investors in the long term. So at this price point, Lucid could be a good deal. Despite still being a more resilient corner in the broader auto sector, investors' angst over EV demand risks are now growing given the impending recession. Jitters in the electric vehicle industry have only intensified in recent months after Tesla, which has long touted supply chain constraints as the biggest brake on growth, saw an accelerated pace of inventory buildup in the second half of 2022 in tandem with deteriorating macroeconomic conditions. But the major overhang for electric vehicle startup Lucid remains on ramping up production and converting hefty order books into restabilizing revenue before buyers take a step back on big ticket purchases decisions ahead of the broader economic turndown. Okay, so they are being very, very aggressive with their cancellations. Okay, following delivery and production misses at key rival Tesla and Rivian reported earlier this month, Lucid full year production and delivery numbers are next on the watch list for electric vehicle investors. We remain confident in Lucid prospects and have achieved inline performance, which would be a breath of fresh air admin door sentiment in recent weeks, albeit much more tempered guidance stemming from 2 consecutive cuts that were painful stomach earlier this year. Looking forward, looking ahead, continued production ramp up and an ensuing pickup in delivery volumes remain a key focus for investors. Attention will also be directed to the new SUV, the Gravity, which will open up reservations coming this spring ahead of its planned start of productions in 2024, as the related figure will likely serve as a gauge of the brand's traction gained in recent years from its flagship Air sedan model, as well as the resilience against a looming downturn in the market, a resilience kind of like Tesla has. Does Lucid have that same resilience? Only time will tell. So here, if we pull up Lucid's income statement, we can see the total revenue has been growing by astronomical amounts, up to 200 million in total revenue, which isn't a large amount, but their growth quarter over quarter is looking pretty good. Annual growth from 4.5 million to 27 million is also looking good. The net income is looking worse and worse every year, though. 2019, they only had a negative $250 million. Now they're looking closer to 2.5 billion negative. They're burning 2.5 billion per year. So let's go into the quarterly and see if it's getting closer to profitability or if they're still burning. It looks like in one quarter, 2021 Q4, they burned 1.05 billion in just one quarter. Now the last 3 quarters have been a little bit better, but the most recent quarter, they still burned $500 million in one quarter. So we really need to see that net income getting better. 500 million, burning 500 million is totally unacceptable. We need a better figure than that. However, they're still pretty good on their balance sheet with a debt to asset ratio around 50%, implying they have twice as many assets as they do liabilities, which is pretty hard to believe considering that the revenue is coming in so low, the net income is coming in unprofitable. So it would definitely be interesting to go into the balance sheet and see where are they getting these assets from, where are their cash and cash equivalents coming from, where is their cash flow coming from as well on Lucid. So overall, I think Lucid is going to be posting another downturn when earnings is coming, and earnings is coming the end of February, by the way, so we have a long time before we get earnings on Lucid. But I think they will head down to around $6 per share. And I think that there's a good chance that we'll see Lucid make new all-time lows on that 52-week chart. So going below $6 per share and into that $5 per share range. So personally, I had price targets around $6 per share, but I'm going to move that closer to $5.50 to get notified. So once Lucid hits $5.50 or even $5.25, that's when we'll revisit Lucid and make another video update about them. But as of now, I'm not buying them. I'm holding off. You guys know I rate stocks on a buy, sell, or hold. And right now, Lucid Group is a hold off right now. I'm not touching them for now, but I will consider buying them once they go to around $5.25. So make sure you're subscribed for that video update. And the next stock that we'll be talking about today is ticker symbol LULU, another stock that went off on my price alerts. And if we pull out on a yearly chart or a 5-year chart, you can kind of see why. Here we can see a pattern where Lulu does spike up. Here we see a spike up in April and then a sell-off of around 30% after that. Next, we saw a rise up on September 12th, okay, around 20% from lows, and then we saw a sell-off around 16%. Okay, and what are we seeing now? Another sell-off of around 15%. So there's a good probability that Lululemon will be rising, so it could be a good time to get in a swing trade. If we screenshot here we can see the support and resistance on Lululemon if we scroll in. So will it go a little bit lower? Is it a good stock to be owning for long term? The PE ratio is 32, implying it is still a little bit overvalued at $309 per share. Will it go under $300 per share? So why is Lululemon a little bit overvalued right now? Are their fundamentals amazingly off the chart? We can see that their EPS is around $3 to $2 per share, which is already looking good. If we look at their net income year over year, we can see that it's been growing tremendously from around 317 million in 2018, growing around 50%, 30%, and present day we see it closer to 900 million, almost to 1 billion in total annual net income, rising another 65% on their net income, which is very spectacular to see. So they get an A on their net income. If we go to their total revenue, we can see that they've been growing from 2.6 billion, growing 25%, 21%, 10%, 42%, double-digit growth year over year without even a hiccup. Now it's 6.2 billion. So an A plus on total revenue. Their balance sheet, they also have their debt to asset ratio under control. It used to be closer to 20% debt to assets. Now it's closer to 44%. They still have around double the assets as they do liabilities, which is fantastic to see. If we look at what analysts have to say about Lululemon, analysts do like the stock. They have a $405 price target in the next 12 months, currently sitting at $309 per share. So that equates to around a 30% upside in the next 12 months for analysts. The lowest any analyst has is $291 per share, and the highest an analyst has for the next 12 months is at $488 per share. We have a bunch of 5-star analysts who just reiterated their price targets just yesterday. So this could be a good time to be doing a long-term swing trade on Lululemon or just a longer hold in general. Dollar cost averaging in at that $310 price point. Now, we will be going over towards the end of the video my best price point for Lululemon, so make sure you stick throughout the entire video so you don't miss out on that. But these analysts all have above $400 price targets in the next 12 months, and they're all 5-star analysts. Well, we have some 4-star analysts down here, which are closer to $488 price target, $435 price target. But analysts really like this stock. You can see that a lot of analysts are giving their 2 cents on the stock. We even have a top 25 analyst, Brian Nagel from Oppenheimer Group, coming in with a $393 price target that was just reiterated 5 days ago. So overall, I think Lululemon's a great stock, and it could be a good buying opportunity after a huge sell-off like we went over at the beginning of the segment. Every time Lululemon sells off hard, like it just recently has done just in the past few weeks, we typically see a spike back up after that. So there's a good chance that we can see Lululemon closer to $350 per share, $330 per share in the next few months. However, if I'm going to be buying Lululemon for long term, my price target's around $265 per share. So I will be revisiting Lululemon at $265 per share. That's when I'll be making another video about Lululemon. So right now, I would say they're not a buy, they're not a sell. Lululemon is a hold. Hold off on buying. Hold as in hold off on buying. Don't touch them until 265. I think 265 is a lot more fair. I also want to see that P ratio closer to 25 or 24 on that P ratio, so we could watch that. And they could be a good stock to be buying right now. I think they are at a fair value right now. However, I just want a good deal. If I'm going to be buying Lululemon, dipping my toe in, I do want one of those smoking deals. It is a good company, though. We just went over the balance sheet, the net income, and the revenue, and it all looked fine. I just want a better deal is all. Now, thank you guys for all the love and support on these videos. If you enjoy the videos, smash a thumbs up. That's how you let me know if you like them or not. Comment below what you want to see in the next video. And if you want to join my close friends list where you can see what stocks I'm buying and you can follow along with the alerts and be up to date and get notified when I'm making buys and sells and option trades and swing trades, go ahead and click on success number 7. Read through some of those success stories. Click on success number 6. There's over 600 positive testimonials now and over 2,000 students total on the close friends list getting tips every single day. You can also message me here on Instagram. I respond to every single person. So if you're interested in signing up for that program, just message me here on Instagram with the Daily Stock Market, now 188,000 followers, and I'll shoot you over my website so you can see how everything works. And if it makes sense to you and if it's inside your budget, then let's go ahead and get started developing your skills in the stock market and becoming a more advanced trader and making money through the stock market, most importantly. So thank you guys for the love and support. Share this video with a friend, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.